Hello everyone, welcome back to the trading course. This is episode 5 and today we're just going to be going over breakup structure. So this is what you're going to want to be looking for. So if you want, say a market is trending upwards, right, and you want it to go down, right? When do you know when it's going to go down? When you see a breakup structure to the downside. Let's say you want market to go up but it's currently going down. When are you going to want to trade? When you see a breakup structure to the upside, right? Okay, so this is generally what you're going to be looking at. Okay, so let's say market is going upwards or you're looking for a breakup structure to the downside, okay? So it's going to be looking like this, making highs and lows right here. And so where are our highs and lows at, okay? We have a low here, a high here, a low here, and a high here. And listen, so the lows are only made when the high right behind it gets taken out, okay? So a high here and a low here, a high here, and so there's a low here because this high right here got taken out by this, okay? And so let me tell you this. So if you see something like this, where is the low at? Is the low right here? No, because this hasn't been taken out. So the low is still right here, and that's what you want to see taken out for the breakup structure, okay? So once it goes down here, once it goes below, that's breakup structure to the downside, okay? So, but if it goes below this, that's not a breakup structure because we do not want to see that part taken out. This is the valid low. So if it goes right here, is that a breakup structure to the downside? No. Okay. But once it takes out that high, right, we can take this as the low. So that's breakup structure to the downside. Same thing for the upside. I'll go ahead and cover that. Gotta delete all this. Okay, so market's trending downwards, okay? Making highs and lows, whatever. Okay, I want you to find where are the highs and lows, okay? Low right here, high right here, low right here, high right here. Okay. There's a high right here because this low right here got taken out by this, okay? So what do we want to see for the break structure to the upside? We want to see this high get taken out, okay? We want to see this, okay? But what if market does this, okay? Is this the high we want to see taken out? No, we still want to see this. This high get taken out. Why? Because this does not form a high because this low, unless this low gets taken out, okay? So if this gets taken out, for the breaker structure we want to see is right here, okay? But so long as it stays above here, above this low, then this is still the high we want to see taken out, okay? So there it is, okay? Okay, so there's a lot of definitions of breaker structure out there with different criteria, and most of the time you'll hear people say that for a bearish breaker structure you will need a candle to close below a low, right? And for a bullish breaker structure, for a candle to close above the high. But I'm here to tell you right now, the candle close does not matter. Only if it's paired with the fair value gap, okay? So it can wick, for a bearish breaker structure, it can wick below a low as long as it creates a fair value gap, and that's a valid breaker structure. And a bullish break structure can wick above a high as long as it creates a fair value gap. That's a valid break structure. Okay, so I'll go and show an example right here. Okay, so let's say market has been trending upwards. Okay, so I didn't draw the whole thing out, but hopefully you get it right. So blah 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 blah, like that. Okay, so you want to see a break structure to the downside. Okay, so since this high right here was taken out by this is now the low, okay? So this is the low we want to see taken out. Did we close below that low? No. But if you look, you can see that we created a fair value gap right here. This is a fair value gap, like I talked about in the last episode, right? So is that a valid break structure? Yes, we wicked below the low. We didn't close below it, but we created a fair value gap. So generally what you'll see is go back into it and dump down, okay? So that is an example of a bearish break structure. No candle close, fair value gap, okay? So right here, bullish break structure. And so this is what you'll see. market is going down, you want to see it take out a high. Okay, so this low is taken out by this low and leaving this to be the high, okay? The high that we're looking for. So we want to see this be taken out. So did we close above the high? No. However, once again, we created a fair value gap as we took out that high. So is that break structure valid? Yes. Okay. Now I want to show you if it doesn't create a fair value gap, okay? So let's say we're looking at something like this. Is that a valid break of structure? No, because we didn't create a fair value gap, right? So what we would want to see for it to be a valid break structure is we want to see no wick. There can be a wick, but the wick cannot be through the high, right? We want to see the candle close above the high, okay? So something like this. This is a valid break structure right here. Not this, okay? Because while we did wick above the high, we didn't create a fair value gap. Same thing over here. Is this a valid break of structure to the downside? No, because there's no fair value gap and we only wick past the low. But allowing a candle close, that is a valid break structure, okay? Okay, so now I'm going to go ahead and show examples of a bearish and bullish break of structure based on wicks and a fair value gap. So you can see right here, market was trending upwards, and so we're looking for a bearish break of structure, right? So we have a high right here that was taken out by this high, leaving this to be the low we want to see taken out for a bearish break of structure. Did we see a candle close below that low? No, we saw wicks, right? And so, but however, we created a fair value gap right here. They went past a little bit, but we went ahead and reacted and went downwards right after that. While we did eventually go back up, we didn't go back up until we took out a lot of these lows right here, right? External liquidity, right? Okay, so as for a bullish example, we have one right here. So market is trending downwards on gold, and go ahead and we have this high right here based on it taking out, price taking out this low, right? So we want to see price take out this high with a candle wick or a candle close, but if it has a candle wick, it has to have a fair value gap with it. So on the way to wick above there, you can see we created this fair value gap, okay? Which we came back down, reacted, and we went right up. So that's a example of a bullish break structure based on a wick and a fair value gap. Okay, as for a bullish example based on a candle closure as opposed to a fair value gap and a wick, we're looking at this area right here. Okay, so for this small time period, price is trending down, and where's the high we want to see taken out? Right here. Why? Because this low was taken out by this wick, leaving this to be the high. So when we see it taken out, do we see a fair value gap? No. But do we need it? No, we do not, because the candle closed above this high. And I didn't have to close so far above this high. It could have closed right here. And as long as it closes above the high, it's a valid break structure. And you can see price trend upwards after breaking structure, right? So for a bearish example, we're looking at this zone right here, okay? So market's trending upward for this small period of time. Where's the low we want to see taken out? Right here. Why? Because this high was taken out by this. And so we're looking right here. So we can see that as price takes out this low, we close below it. Do we see a fair value gap? No, but why is it okay? Because we closed below it. As you can see, it was valid because we continue going down. Okay, so last thing about break structures is that they are based on time frames, right? So if we're looking at the 15-minute chart and we see that market is bearish and we see a break structure to the upside, that doesn't mean that the one-day chart is bullish, right? If we're looking at the one-day chart and we're seeing a bearish market and we see a break of structure to the upside on the 1 hour chart, that doesn't mean that the one day is bullish. That just means that the 1 hour is bullish. Until we see a break of structure to the upside on a one-day chart, then the one day isn't bullish. So same thing for the opposite way. So if our market is trending upwards on a one-day chart and we see a break of structure to the downside on a 4 hour chart, then that only means that the 4 hour is bearish and not the 1 day. Until we see a break of structure to the downside on the 1 day chart, we are bullish. All right. So that's all I have for break structures. I don't even know what the next video is, but happy trading.